First of all, I want to thank many of you for sending your birthday wishings, wishes, and I will definitely be responding to some of those later in the day. I was kind of out and about all day yesterday. Listen, the market, the Tesla specifically, opened with a big downstroke this morning, a very large sale apparently. It had a big long thing like that under the volume. So somebody, I think, jumped in with a big sale. It was kind of snapping back. People, I guess, bargain hunting, were grabbing some of the shares, but then a lot of negative reports out this morning, continuing to show that softness in the economy that I've been talking about now for a couple of months. So I would definitely, Bessent said yesterday on, I think, Meet the Press, he said, look, yeah, there's a chance there's going to be a recession. Well, there you go. Last week he just said rough road. Now he's saying, yeah, I can't rule out a recession. I can't rule out a recession either. I think there's a good chance that we will have certainly continue to believe that we're going to have at least maybe one quarter of less GDP, less negative GDP, and maybe it'll be two quarters. But the future, as we'll see later from another article that we're going to talk about this morning, the future is very rosy. And of course, that's what the market will eventually ferret out. The market will eventually go, okay, we get it. Now we see the direction. A lot of that, I think, is going to happen after April 2nd when the tariff thing settles down. And Bessent said this as well. He says, yeah, hang in there. Well, anyway, let's get into it. Let's get into the details. Tesla is up 50% from a year ago today. As Brian Wang points out, the 50% off from all-time high is also normal for Tesla. That's a very normal thing, especially when they get out so far, compare, I mean, so what was it, 120, 140 PE. So this is not at all unusual. Just a little, positive, some optimism this morning. Brian Belsky from BMO Capital is maybe one of the reasons that Tesla is down this morning. He says everybody needs to slow down in terms of their emotions on Tesla. This has been a couple of months. Let's take a deep, deep breath. This is a company that's been in the works for decades, that continues to exude technology prowess with one of the smartest, most brilliant people in the world. Whatever your political connotations are, you need to set politics aside and take a look at what the man has done with respect to the companies and technology going forward. We do believe that Tesla remains the best EV out there. We do continue to believe that the technology is going to happen with regard to robotics, driverless cars, what he's done for the Starlink, SpaceX. So I think the notion of consumers, I'm not going to say there's not going to have some, problem with Tesla, but that they're not going to be in Tesla anymore, nah, that's not going to happen. Some of the actions and issues that they're displaying, I think is quite frankly deplorable. And I obviously don't agree with that type of behavior. But at the end of the day, this is a great company. We do believe it'll be around for the next 5, 10, 20 years. Well, that's pretty obvious. By the way, that was not the article I thought it was. That was a kind of a nice positive article. Gary Black this morning had 10 things, he says, that Tesla thoughts for this week, some positive, some negative. Number one, Tesla full year 25 sales are far more likely to be driven by new Model Y production coming on stream than anything that Elon Musk is saying or doing. That is 100% true. Agree with Gary 100%. Number two, the loss in Tesla volume among Democrats turned off by Elon's political comments will be more than made up by Republicans who follow President Trump's lead and buy a Tesla for the first time. 100% agree with that. Been saying it for, 18 months. Number three, from a stock standpoint, Tesla is still largely a car company. The Tesla unsupervised FSD efficacy March of nines by year end will sell more Teslas. So now Gary's a believer that whether it's June or not, he thinks by year end we'll be there. Number four, the new, more affordable vehicle has to be a new form factor that expands Tesla's TAM to new segments for Tesla to grow their full year 25 volumes and earnings. I don't agree with that. I think they'll sell a lot because of FSD. Number five, but I'm certainly expecting the Model Q. Number five, if they report out of China that there is no new affordable model, just a scaled down M3 or MY that funds price cuts with cost cuts, we will likely see a repeat of 2023-24 when prices were cut 20%. Tesla got zero volume increase out of that. I think he's wrong about that. If that was all that happened and they have the volume and they have the capacity, the production capacity in China to take advantage of the lower cost cars, I think it would increase the total number of cars sold, but it may not, especially with the new Model Y. At one end, you get the new Model Y, all the benefits and features. Then at the other end, you've got a lower cost model that more people can afford. That's got to increase product, got to increase sales. Number 6, China insured registrations should jump to the 16 to 18,000 level for the last 3 weeks of the quarter as Model Y production ramps up. Everyone's waiting for the new Model Y, which is beautiful aesthetically and technology superior to its predecessor by a lot. Number 7, we expect Elon to tone down his political rhetoric. What? While continue to doing yeoman's work, not going to happen. The vast majority of Americans support reduction in fraud and waste. It was the Nazi salute, and it wasn't a Nazi salute. The perceived Nazi salute, and the backing of extreme right radical groups in Germany that were highly objectionable. It was not an extreme right-wing group, and so I disagree with you, Gary, on those two. It seems crazy. Number 8, it seems crazy that Tesla is on its way to a second consecutive year-over-year volume decline with the best EV products on the market when the rest of the EV business is growing at 20-25% per year. Until Tesla can show it has the marketing skills to stop the share loss in its core business, its forward PE ratio will continue to deteriorate. I think Gary had said earlier that he believed that the 𝐓𝐮𝐬𝐻 effect on Model Y last year was the reason why we didn't have an increase. That I would agree with as opposed to this comment. Number 9, the market is, and I think that, again, Model Y improvements this year would increase their sales just by that and then add unsupervised FSD, incredible. Number 9, the market is not going to attach a high valuation to business it can't attach a TAM to, and they're waiting for that kind of news. Bulls who spout capacity-driven models, trips per day times miles per trip, to justify Tesla's valuation, have no sense of how valuations work. I think he's talking about the robotaxi. I think there will be. I think that I think that I believe that every time Tesla has reached an all-time high, it's been because of the belief in unsupervised driving and robotaxis, and that's what happened this last time. It hit 480. When we have actually got robotaxis and unsupervised driving, we will be back to more than 480. Number 10, Tesla stock sentiment likely bottomed at 222 this past week as new Model Y deliveries take off and investors realize that the increase in Republican Tesla buyers will offset any losses. Okay, this is from Market Watch. I think this will be the article I was going to say earlier, might have something to do with part of the sell-off this morning. Mizuho analysts lowered their stock price target for Tesla by 16% Monday, citing softer U.S. and European Union demand trends and increasing competition in China. The team cut their price from 430 to 430 from 515. It's still a good price, 430. And the stock fell about 1% pre-market. We estimate, the quote says, Tesla's February 25 sales in key regions, Tesla's February 25 sales in key regions, EU and China significantly underperformed the market, with the US down about 2% year over year, China down about 49%. Well, we know this. This is like, of course, because there's no Model Ys. The sales woes are driven by deterioration in geopolitics, brand perception in the US and EU, market share loss in China to rivals, and softer than expected demand for the Model Y refresh. That is nonsense. I'm surprised by these guys. That's really silly. The company's Chinese market share is key to sales in Europe. The company's Chinese market share is key as sales in Europe and the U.S. have fallen sharply of late. Musk's involvement with the Trump administration, the Department of Government Efficiency, has led to protests at Tesla facilities, vandalization of Tesla electric vehicles, and altercations between protesters and Tesla owners. And then I say that his comments supporting the far right, his comments supporting the far right in Europe have led to boycotts across the continent. Whatever. I'm sorry, it's just not a far right. I really looked at it. They're not far right. This is Randy Kirk. Hit like, hit subscribe, hit notify. Later today, Brian White and Larry Goldberg as usual. And then, of course, hitting the, I don't think I saw any birthday gifts yesterday in terms of joining Patreon. That was sad. Okay, According to NBC, President Trump has the highest approval ratings he's ever had, 47% approval. Rasmussen is at 50% and has been at 50 to 53%. And Rasmussen, by the way, is now probably the best polling house in the country in terms of accuracy. Economic approval by NBC says 44%. Right track versus wrong track, 44%, up 17%. Rasmussen, of course, showing approval, or right track at one point was positive. Nobody's ever seen this before. It's been, 30, 40 years of tracking, right track, wrong track. This is by far the highest ratings. Inflation effort, he's only getting a 43% approval rating. Doge is only getting a 41% approval rating, but that doesn't make any sense. If Doge doesn't do their job, they need Doge in order to do the inflation effort, and then Elon only gets a 39%, and he's in charge of Doge, which is the way that you're going to get the inflation. Anyway, I can't explain these things. All right, we got this from Mazemore, Mazemoor this morning. He says, Vice President Joe Biden says this in 2010. Listen now, listen carefully. This is a quote from Joe Biden in 2010. We waste a heck of a lot of money. 1/3 of Medicare goes to nothing useful. We have to figure out how to stop it from bankrupting the country. That was Joe Biden. Could we see that on some of the mainstream media? Could we see them making this point? Axios says this morning. Treasury Secretary Scott Bessent broke with orthodoxy Sunday when he said corrections in stocks were healthy and an antidote to euphoric market action. Well, I broke with orthodoxy, I bet, 6 months ago when I started calling for that we had to have a correction. We've gone way past our skis and we needed a correction. Said it over and over and over again. So I've been breaking with orthodoxy for a long time. The big picture, over the long run, he's not necessarily wrong. What they said, I've been in the investment business for 35 years, says Bessent, and I can tell you the corrections are healthy. They're normal. What's not healthy is straight up. Then you get to these euphoric markets. That's how you get a financial crisis. Bessent told NBC's Meet the Press Sunday. Zoom in, they say. Corrections or a 10% decline in market from its recent peaks are pretty common. They've happened dozens of times in the S&P 500 in recent decades. Most recently, usually about every 2 years. Most recently starting last Thursday. Between the lines is their next section here. Since World War II, such corrections have happened and deteriorated into bear markets, a 20% decline, about 1/4 of the time. So Carlson Investment Research, Ryan Detrick noted on X. In other words, more often than not, the market bounces back. In the correction, on average, markets take the 5 months to fall from the peak to the bottom, and then 4 months to bounce back. That's according to Clearmonic's data shared by Covenant Wealth Advisors. After that, markets tend to rise strongly. On average, between 1997 and 2020, stocks were up 32% 1 year after the correction, per data from Gateway. The bottom line, past performance is no guarantee of future results, but it may be a reason to worry a little less if we enter into a correction. Well, we already got the correction. We're probably going to, as I said, probably going to have a little bit of a negative GDP. It'll be fine. We'll be just fine. Thank you. Market Watch. Sales of U.S. retailers rose only 0.2% in the last month. According to the government, economists polled by the Wall Street Journal had forecast a 0.6% increase. Most of the increase in spending last month was concentrated in online stores and pharmacies. Other retailers reported soft or negative sales. Retail sales are being watched even more closely than usual to see if President Trump's tariffs and deep cuts in federal workforce are hurting the economy. We hope they are. Sort of. Do you know what I mean? Consumer confidence has fallen to a 2.5-year low. Sales sank a revised 1.2% in January. largely because of bad weather. That was a revision from the 0.9%. They actually fell 1.2% in January largely because of the cold weather and a post-holiday lull. So people were expecting a bounce back from the cold weather, but cold weather may have also been a factor in last month's, in the February soft sales. Retail sales represent about 1/3 of all consumer spending and offer clues on the health of the economy. In 2024, retail sales rose a solid 4.4%. Big picture, retailers and other companies were optimistic about the new year in anticipation of lower taxes and less regulation by the Trump administration, but a series of trade, they call them wars, they're not wars, trade negotiations launched by the president have dented the confidence of business and consumers and sent the stock market plunging. Excluding autos, the decrease was 0.3%, which was in line with expectations. So autos took the biggest hit, and which is, cold weather, that happens. But I don't think it's cold weather because listen to this might also be cold weather. Who knows? Empire State Manufacturing Index. You may remember in January, it was dramatically higher than expected. But now that we've got the March numbers out, business activity dropped significantly in New York State in March. Well, it's only 2 weeks into March, but anyway, okay. According to the firms responding to the Empire State Manufacturing Survey, the headline General Business Conditions Index fell 26 points to just 20. New orders and shipments declined. Delivery times and supply availability held steady. Inventories continued to grow. Employment levels and hours worked continued to move slightly lower. Input prices increased at the fastest pace in more than 2 years, and selling price increases also continued to pick up. Optimism about the outlook waned considerably for a second consecutive month. By the way, it would be okay if U.S. domestic manufacturers got to raise prices a bit, or if they saw some increases in the raw materials. Price increases pick up again. The index for number of employees held steady around 4.1%, 4.1, and the average work week index was 2.5, a slight decline in both employment and hours worked. Both we talked about the price increases changing, and we talked about the optimism. Okay, then just before I came on, the builders' confidence information came out, and this was a little bit also of a downside from what was expected. Builder confidence in the market for newly built single-family homes was 39 in March, down 3 points from February and the lowest level in 7 months. Also missed expectations, which were set at 42. First of all, current sales conditions fell 3 points to 43. Sales expectations in the next 6 months held steady. This is the point that's most important. The traffic of prospective buyers dropped 5 points to 24. The latest HMI service also revealed that 29% of builders cut home prices in March, up from 26% in February. Meanwhile, the average price reduction was 5%, which is the same as the prior month, and the use of sales incentives was 59%, also unchanged. Actually, not a terrible report, but in general, I would say that the market is probably down a bit because of these two reports and Secretary Bessent's comments over the weekend. Squawk Square had this. This is some fun things before we look at the numbers. Squawk Square says, seeing all of these Tesla protests over the weekend make me laugh. These people protesting are exactly the same people who are the leftist radicals that were pushing everyone to buy an EV or a Tesla the past 4 years to save the climate. Now they've switched their entire climate initiative to protest a company that's trying to save the planet. I wonder if these Democrats and liberals even can keep track of what they stand for each week. They sure seem to forget quickly. Most are probably paid actors, too. Captain Mark Kelly, over the weekend, you may have heard about this. He says, well, I got a new ride here, built by union labor here in the Americas, thanks to UAW. And Tesla Rado responds, he says, well, so a politician who's supposed to put America first went from an electric car that was amongst the most American-made to a gas guzzler that is mostly sourced from foreign countries. That wasn't a move that you thought it was it, Mark? All right, so let's take a look at the numbers here. Where are they now? We have got the NASDAQ falling into negative territory at 5211. Tesla is following along, as is the entire Magnificent Seven. Tesla is down 12.84 at this point after starting out down 9 and then popping up. It's now joining the NASDAQ and going down. Let's look at the percentages. We've got the Dow Jones still up 0.33, NASDAQ down 0.29, S&P down 0.17, Tesla down 5.14, and you have got NVIDIA down 1.54, Meta down 1.15. Yeah, so this is, I would say right now, Tesla's big downward move this morning is primarily because that one big shot, and also the PT, the price target revision, with some bad analysis. Was that crazy bad analysis? We have got the Cathie Woods all down. Everyone, oops, instead of except Square. I'm telling you, man, I missed out. Should have bought some Square. All right, so let's go ahead. And I never did look to see why Square is going up like every day, no matter what. Let's go ahead and look how bonds. I know bonds were down earlier. We've got the 10-year. Let's make sure that this is current. Yes, okay, finally. Okay, we got it down 2 basis points. We're back down to 4.287. Need to get down to 4. Need to get down to 399. But at least directionally, we're right this morning. I'm sure this is partially due to some of those reports we read, but the 2-year actually up 1.7, and the 2-month up 0.3. Not even 0.3. I'm sorry, that is, yeah, I guess it's 0.3. Yeah, 0.3. Okay. They're adding additional decimal points, and it's throwing me off. I'm very sorry. Okay, let's go to the oil patch, which is up a little bit. You can imagine that oil would be up a little bit. It's up 60 cents, but still, we're at 67,678, and that's with all the stuff going with the attacks on the Houthis and attacks in Yemen. It's expected that you would see oil up a bit. Brent is for $3.50 though, only $3.50 more. So that's not the oil business is not particularly interested, I guess, in all of that. It's still very, very low right now. We've got natural gas down 1% this morning at $4.06, still hanging up there above $4. Gold is up a little bit, just $1.60, sitting just over 3,000 at 3,002. Silver similarly sitting just above the 34 at $34.30. And copper up 0.62 this morning, just under $5. Everybody's sitting right in these all-time high ranges. Remember, copper is also at all-time highs. You've got the dollar gain, the euro, I'm sorry, the dollar's down a bit this morning, probably on some of that news we just discussed and the bond market being down. And we have got crypto basically flat at 83,000, and that's it. Those are the numbers. So what are you going to do? Okay, you're going to go look up my rant from last night. I'm going to put that up here. If you didn't look at my rant, you need to go back and check that out, where I pump Elon Musk because he's a great guy, and I hate what they're doing to him. And then today you're going to watch Brian White at 7:45 and Larry Goldberg at probably 5-ish, maybe a little before 5. And I'm sure both of those will be stunning, as they always are. And hitting Patreon would be lovely. And yeah, I'm thinking that's it. I think that's all I got for you right now. It's been great. Oh, you want to hear this one more time? How bad Tesla's doing this morning? No, you don't want me to go back and tell you that, right? Well, it's $12, $11.45, $11.45 down this morning. I have a feeling that the market is going to end up off today. I have a feeling this is 2 more. I didn't say this. I forgot to say this. 2 more pieces of evidence that we could get the Fed to actually lower interest rates on Wednesday. They got more reports coming on Tuesday, even some more reports coming on Wednesday. They have time to decide to actually go down a quarter. I have this gut feeling that they will. Now, they might not. And most people don't think they're going to, but they should. And I'm thinking maybe they will. All right, that's all I got. It's been great talking to you. Bye.